Hey guys, welcome to another video. In this video I'm going to introduce my new tweak to Frame 3.0. And to refresh your mind, Frame 3.0 is time and price, as we like to call it. And just to show you again what's it about, it's mainly about waiting for confirmation after the DR is formed, and then we're looking in DR Lens for the price retracements that we expect, and for the time retracements. Then we would mark that on the chart, and then at this zone here we're gonna look for a reversal. So that's just the simple time and price, and then we also have a certain target associated, should be somewhere like here, and we would just wait for it to hit the target. Now, the big problem with time and price, what I often see and what I have spoken about with other community members, is that it remains difficult to know when exactly you should enter, because we know that we have like these rough areas where we want to enter, but still, you know, when price reaches the area, there's still a very high likelihood for you to get spiked out, and you know, very often price doesn't actually reverse in that area. So that makes it a little bit more difficult, and there was also never any exact model given for this entry method. So a lot of people are making mistakes with this and are not becoming really consistent with this specific type of strategy, and they refer to like other strategies like the goldfish that is a lot more mechanical and also easier to execute. And of course the monkey, which is purely time-based, but also somewhat related to frame, of course. But you know, the master actually gave us three types of ways to enter in these areas, and the first one was definitely like the monkey. So then you would expect price to do a retracement in this box, and then at the end of the box you just enter. And the other one was actually also a rejection, so that's when a candle, you know, comes into this specific area and has the inability like to close above a certain important area. We would see that as price exhaustion and then expect it to reverse. And the other one is just based on, well, just the fact that we know that price is going to reverse there, we would just enter a trade because it's our high probability area. And a lot of people have been trying to use the monkey, and the monkey is also very simple. It can be very effective, but as you might have already realized, the monkey isn't that great. You know, it's, if you've done a lot of backtesting on it, you'll see that, you know, yes, it makes profit, but it's going to be a lot of hassle for you. You know, there's just insane amounts of loss streaks, and yeah, you really gotta catch all the trades, because you could miss out on that single big winner that basically makes your entire year. So that is making it a very challenging strategy to work with. At least that's how I experienced it. The second one is using rejections, and that is also kind of a problem, because there's many ways to define what a rejection is, and you know, and I know from the beginning that, you know, in the beginning we only had simple levels. So we had the DR levels themselves, and we had these VIPs. We just call them VIPs. Later on they were also characterized and differentiated, but at that point we only knew about one type of VIP. So I was just looking at these VIPs, and when I saw price retracing in a certain area, you know, where I expected to retrace, I would just look at, is there a VIP in that area? And, you know, if I would see price trying to close above it and failing, then I would take the trade already. So let's say that we saw something like this here, you know, for example, this candle here. So it just crosses it and then closes below. So I would probably take it here. But then later on, Master specified that that's not a rejection. A rejection is actually when it has some to the tick touches, either with the body or with the wick. And then later on, I use that. So just if it does one to the tick in that area, I would enter, place your stop a little bit higher, and then aim for the target. And that did already improve my results, but still I didn't really get the results that I really wanted. So at the end, I moved away from this time and price and started with goldfish and other types of strategies like DR formation, because this was just not really working for me. But however, it is what Master refers to as the bread and butter setup. So the setup that actually has the highest probability and also was going to bring you the most money in the long run for all the DR traders. So I didn't really get that at that point, but now I actually do, because there's just some things missing that's really important to really make this work. So just to recap, we all know roughly where we should enter and what it should look like somewhat, but the real problem is exactly what you want to see to make sure that you're catching the real top or the real max retracement. And that's what I call basically the missing link in time and price. So what I've done with my backtest, with my latest frame 3.0 tweak, is I looked at the different entry methods first. Like, what do we have available to enter? So we can take the time entry, we can take the just enter whenever it comes here, or we can take the rejection. And I've tested which one works best. And I also tried to make a Confluence scoring system where we look at all the concepts that are taught in the DR Academy and try to make this more mechanical and quantify this aspect. But it also it was working pretty good, but I must say that it's not really consistent, and it also really depends on how you feel and how you your behavior and everything can really impact your results. You have to be very sharp to correctly assess the confluences. And it's also something that's very difficult for beginners, because if you want to be very precise, accurate in your assessment, you need to have a lot of knowledge and experience with all these different DR concepts, which is typically something that you only really master after maybe a year into the program. So although it could definitely work, it's really difficult to maintain certain consistency in this entry method. And the last thing that I tested was the rejection strengths and the different types of the rejections. So if we would approach this certain level, what does it look like? Do we have one rejection? Is it with the tick? Is it with the body? Is it with the open? Is it with several in a row? And in the end, I actually found that if we want to just look at which type of entry method predicts the highest chance of it being the max retracement, this was actually the best setup. So rejections are, from my understanding, very leading in predicting the top or the bottom in a certain trend. So then I went on and I tried to make a classification. So first I, backtested, re-engineered, went through historical examples of tops and bottoms, like here, and just wrote down, what do I see here? What kind of behavior is price showing around these levels? And in this example here, we can see that it closes, or it went below and it closes exactly on this level. Then another candle opens on this level, went below it and closes above it. Then another one opens here and then closes higher than here. So that's just how I went through all of these historical examples to try to make a sort of classification system of when we're talking like about a very good rejection and when it's just mediocre. And in the end, I came up with the following classification. So let me zoom in on this. And the first thing that I realized is the importance of time and price itself. So as DR traders, we're always seeing, when we have a confirmation, time and price as like these two things that are very dictating in whatever we're expecting. So the relation between time and price is very important in what we want to see in candle rejections. So one thing that I really wanted to see is that when we have very low probability in time and price showing us that we should expect a reversal there, that we would also need a much stronger rejection, and of course vice versa, that if time and price both are aligning very well, so we expect price to somewhere reverse in that area based on both time and price, then we need basically less evidence from price action itself. That's something that was very logical to me and should work out. Okay, so I say should because I still needed to test it, of course, and see if it actually made sense. But that's what I went on and did. And I took several samples because first I didn't really know how to classify it. So, I started with very different classifications. Like the first one I would start with is just 1 wick and close below, so not even to the tick. And many different types of variations. I'm not going to waste your time to talk about that. But in the end, what was basically like the minimum rejection that you need is a to the tick from 2 levels at the same time. And when I made that conclusion, I was kind of shocked, knowing that, because I thought that even 1 to the tick is already very strong. And I spoke with a lot of people about it, and they also use 1 to the tick. And it really amazed me that it's actually really weak. Because when I marked all the entries that I took with just 1 to the tick, it had below a 10% win rate and was highly unprofitable. So I quickly already deleted all those type of rejections, and then I concluded that the least what you need is 1 time to the tick from at least 2 levels. So that would look something like let's see if I can find something. Something like this. So you see here this VIP on top of this IDR level, and then the candle goes below and closes exactly on the IDR and also on this VIP. So that is the least amount of rejections that you want to see. And even that is actually pretty weak. It's the lowest grade that I classified. So you only want to see this, you only want to take these kind of rejections when there's both high time and price alignment. So once the alignment between time and price reduces, you increase your rejection. So the B grade rejection is when you get 2 times to the tick from 1 level. Let's see if I can find an example for that. So here you have this VIP and it closes here, and the next one opens here, comes above and closes here. So here we have 2 times the rejection to the single level. So that would be a B class, and it's quite strong actually. The next or another characteristic of a B grade can be a single to the tick from 3 levels at the same time. So that is something that also It doesn't very often occur, but you know, if you're using all the levels that we have received, so all the different VIPs, you will see that most often at the most important levels, so wherever price reverses, you will see that it rejected at least 3 or 4 levels. So, and that's exactly where you want to enter, of course. So here, if you would look at this example here, we can see here that we got a rejection from the IDR, then from this VIP and this multi-time frame, and also the special. So it's kind of stacked on top of each other. That's what you often see, like they are stacked on top of each other, or the wick rejects certain levels and also the body close. And the more levels that you reject simultaneously with one candle, the higher the grade of the rejection. So typically when you have like 4 levels that price is rejecting from with one candle, it's typically very strong. And these type of trades you can actually take even if there's, you know, low time alignment. And basically, like, the best rejection that is available is when you have at least 3 times to the tick from one level. So that's something that doesn't really occur very often. It's kind of rare, but whenever you see it, it will usually give you a very good reaction. Like here, for example, the 3 bodies exactly to this level. So this is a very strong level, and this type of rejection is just very significant. So it took me a while to make this exact classification and also to test it. But this is what I currently think is a logical way to classify them. And I also coupled it with, like here we can see the time X price behavior. So what kind of rejection that you want to see with what kind of combination of time and price. So when it's, for example, both low time and low price, we're looking for the best rejection possible, which is the premium. And as an example of this is like when you know, it's making a new AMR after any median time of max retracement. So time is not really in our favor anymore, and we're also, for example, here we are like above the price cluster. So from a time and price perspective, we're not interested anymore. But with this current model, we would still be interested if we see a premium rejection. So we would have to reject one level or several, at least 3 times to the tick, like it does here. And then for each of the different combinations, we have different classifications. And then, of course, what I mentioned previously is like the stronger it gets, time and price, the less evidence we need from the candle rejections. Let's see, I think I made... Okay, so there's one thing I still needed to change here. So these are all B grade. The only time that we can actually take a C grade is only if both time and price are aligned. In all other cases, we need at least a B grade rejection. So the results for this model itself. So I did 121 trades with this current model, and the result was 0.7 average R, a total R of 86. The win rate is 21%, but it doesn't include break-evens, while break-even is a very integral part of the strategy. So you can see that there's 21% win rate, 22% break-even, 56% loss. So these are, I think, quite good statistics already for time and price. You can also see that in the average R. And here you can see like a different type of rejection. So the classifications and then the combination with the price and time. And you can see, for example, that the low rejections have a very horrible performance. So these ones are X'd because we're not allowed to take a low rejection when time and price is low. according to the system. And same for this. So only these are allowed, and you can see that the average is very, very bad, except for one, which is when both time and price are high. Then for the median rejections, you can already see that the average is a lot higher, and then also for the high rejections, it's a lot higher. So that already shows you the evidence, like how bad a C-grade rejection actually is. So I can also filter it here. So you can see here, whenever the rejection is low, which is basically a C, we have 23 trades and a total R of -3. So it's actually losing if we are looking at all the types of combinations and just filtering this one. But once we go to like the medium, we can see that the results are way better. There's 61 trades, 50 R, so 0.8 average R per trade. And when we get to the high, it's even higher, so a 1.1 average R. And also the win rate starts to get really high. So I basically started also looking at different ways to how to improve this setup, because now we know, of course, when we should enter, and we also know where our target is. But the thing that we still haven't discussed yet is, for example, the stop loss placement, and that of course remains something that is somewhat discretionary, because it also depends on your approach to risk. But one very useful and also something that I used for this this backtest is the 3 barrier setup, or the 3 barrier stop loss. And that's just that whenever you enter somewhere, you're gonna want to have at least 3 barriers between your entry and your stop. So let's say that we would have entered at this candle high here, or candle close. We would switch on all the key levels that we have, and then we're just gonna count 1, 2, and 3, and then we need at least 3 barriers, and then we're going to use that as our stop. So 2 ticks above it. And it actually worked very well. I also tried like 2 barriers or 4 barriers, and I think 3 barriers is a very good efficient stop loss placement. Sometimes you still can get stopped out. That's obviously inevitable. There are cases also where the stop loss is not logical. For example, when there's not many levels. It can happen sometimes. There's only like 4 or 5 key levels in the entire DR, and that would make the 3 barrier stop loss not perform that well. So in such a case, it's good to trim it a bit, and also vice versa when it's very dense, to increase it to like 4 or 5. So generally you can just use the 3, and whenever like it looks like doesn't make any sense, you can just adjust your expectations. So it's not that big of a deal, basically. So now we've discussed this part, I think it's time to dive a bit more deeper into the setups and the model itself. So like the general rules, which is based on just the normal 3.0 frame rules, is you need a confirmation first, wick or body. You need a minimum of 3R. Otherwise you just have to wait, see if there's a next candle close that's more favorable. The target is frame 3.0. We close at the end of the session. We go to break even after plus 2R, which is very important, because a big part of the strategy is that you're going to catch the tops and the bottoms. And that gives you a very big advantage, and that's that you very quickly can go to break even. And generally like this strategy, because we're going for a very high target, you're not going to get a lot of wins. So most of your trades will get stopped out. And the break-even rule, I think, is very important, because like 20% or so of your entire trades will be at break even. And a very important part of the strategy also is re-entry, which we will also discuss in a bit. So stop loss, just mentioned. Third barrier, 2 ticks behind it. We don't take any more trades after it reached target. We don't take any trades 30 minutes before the end of the session. The max loss per session is -2R. So we are allowed to lose one and get a BE, and then, as long as we don't reach the -2R, we can continue to trade for the session. I only traded bucket 1. I know that bucket 2, bucket 3 are also good. You can try those, but for the sake of simplicity and practicality, I use just bucket 1. And also, well, generally you're gonna look at the AMR when you're gonna assess time and price alignment. But once MRT is over and price is retracing back and it's not the AMR, so for example AMR is much more deeper inside the DR, we consider it low time. Just because like price is going back, retracing in, and we are not really supportive of a reversal, later in the session. It just doesn't really happen often, so we're very focused on price. Okay, so I think it's good to go over a few examples. So just to show you what I have on my chart here, this is of course the normal drive indicator, but I also have a special indicator that calculates the clusters for me. Please don't ask me for this if I have it, because I don't have access to it anymore. I'm trying to get access to it. It's because it's made by a German dude, but I can't get to him, so sorry for that. Then we have the limiters, we have the specials, standards, multi-time frames, weekly DR, and the normal DRs. The weekly DRs, I've set them to 2022 as per master's recommendations. And then for the limiters and the specials and all the other drips, I don't really have a default setting for the body fills. I typically would advise to just play with it. So, most of the times when you have 15 or 20, it doesn't really matter too much. But what you should do is just zoom out a bit and look if you see any relevant levels here. For example, here you can see that here is a level that is stopped here, but it's actually really important, as here it's holding price back. So we're going to increase it until at least that level is apparent here. So we would do that for all the levels that we'd see here. And you can go crazy if you want. So you can go to like 34, 35, something like that. As long as they are relevant. That's the only important criteria. So we do this for all of the drips that we have. And multi-time frame is just the normal settings. Don't really touch it. And the drive is also normal. I think it's like 10 days. Yeah. So if we go into the ODR session here. So for me, it's automatically painted already, but you can do it yourself using, of course, the lens clusters. But for Monday ODR long first bucket, I have the most important clusters at 0 to positive 0.2. I have minus 0.3 to minus 0.5 and 9 till minus 1 as the most important ones, the big peak clusters. And then the smaller peak clusters, so I call them like relevant price clusters, but not the most important ones, is I think 1 till 2 and 7 till 8. And then for time we have 3 clusters, so it's 15 to 25 or to 30, 30 to 45, and then we have 5 a.m. until 5:15. So I can just show you quickly. what it looks like this. So I picked this cluster here as relevant, the 1 to 2, and then this and this one is and these ones are most important to me. And here you see the time clusters. So then we have to be aware constantly of the price and time alignment, because like this we are having constantly in our head, because we need to know what type of rejection we are looking for before we can take the entry. So we're gonna start printing the first candle here, and then for each candle I'm gonna just look at each of the indicators to see if there's any rejections. And if there's not many levels going on, you can actually keep them all on. It's a little bit easier. If it's very crowded, you can just switch and count the rejections. Okay, so next candle, and here we see like the first to the tick rejection. I think it's just one. Yeah, so it's one from the DRC. So that's one. And that's it. Okay, so just to remind you, we are, so we touch this price cluster here. So price would be aligned highly, and time not, because time starts here, so there's no time alignment. And in that case, what we need is we need at least a B grade rejection, which equals 2 times to the tick from 1 level or 1 times to the tick from 3 levels. So it doesn't really meet the conditions yet. Price starts to go up. We see one rejection here. That's it. So now we are inside the time cluster, the first candle that is inside this area. And from this point, we're calling time highly aligned. And as we know, price is also highly aligned because the AMR was actually in this area. So continuing. So here's 2 rejections. And since we are in the time cluster and also in we touched the most significant price cluster, that means that we only need a C rejection, so it's high high, so we only need a C, and we have 1 to the tick from 2 levels, and that because that's the MTF with the wick this one and with the body this one. So we would take a long here, use the 3 barrier stop loss placement. So we could use this level where it's rejecting from. We have the 0.5, we have this multi-time frame, that's so good, that could be 3 already. But you can also not count the level that it rejects itself from. So if it closes here, you're not going to use that one. You're going to use this one, this, and this. We would have something like this. Would not be enough for the RR. So if you're using this level as well, then it would be enough. Then you would still have your 5.4. If you would be more conservative and take this area, you would have enough, and you would just be better off waiting, for example. So nothing here. Big rejection, and we're moving further down. Now it's getting tricky to see everything, so I'm gonna slowly cycle over all the levels to see if we see a nice rejection. We see nothing, so we're waiting. Another here, now we see it to the tick rejection to the DR level, and the DR levels are also areas that we can reject from. So that's the DR upper, bottom, the IDR, the mid, the open, and also the close. So that's one. And there's nothing else. So also to remind you, we're still in the time cluster here, so that's high. Price is also in the higher clusters, also high. We need only 1 to the tick from 2 levels at the same time. So moving lower, still in the price cluster, and also in the time cluster. So now we see 2 to the tick rejections with the wick to this lower DRC and the body to this smaller DRC right here. We also see it to the tick to the special, so that's 3 to the ticks already. And that's already enough. We need actually 2, so 3 to the ticks already makes it a B grade, so that's more than sufficient. Then we're going to use the 3 barrier stop loss again. So you can take, for example, this level, and the special, and then 2 ticks below it. Or if you wouldn't take this level itself as rejection, you can take the lower DRC, so this lower part, the special, and then you see this mid WDR right here. You would go below that level and target, of course, here. So there we go. Okay, so after 2R we move to break even. That's a very important part of the strategy. So here we get BE'd, basically with this candle. And from that moment we just start to continue to look for another setup. So this candle doesn't give us any nice rejection. Right now we are not in the time clusters anymore, so we don't have any time alignment. We still have very good price alignment. So from this point on we're looking for a B grade setup. We have 1 to the tick rejection to the special. And nothing here basically. One to the tick to the DRC. And also to the special. Nothing. So this one is 1 times to the DR level, to the special, and that's it. And here we have 2 times to the tick, to the DR level, and to the special. So that's already sufficient for us, because it's a B grade. So then we would enter here. Use the 3 barriers again, so it's 1, the DR is 2, and then this close on top of the IDR is 3. So go 2 ticks below that and target again here. So BE again, and we reach a target. So that would already be a 5.29R for this trade. So as you can see, like, you have to be very aware of where you are in terms of time and price alignment, and also what you need then when we're talking about like the grade of rejection and re-entry, and that kind of stuff is really important. Because it will happen very often that you get stopped up, because you're going to take these very, after you see such a rejection, usually price will start to move away from you. So this is the first example, and then we're going to do one more. So into the ODR or the RDR, we get a wick confirmation, and we retrace a little bit back into the DR. So quickly go over all the levels. There's 1 to the special. I think it's 1 to the, yeah. So just looking if it were 2 or just 1, but it's already 2 to the ticks. That's 3, 4, So 4 rejections already from one level. That means it's an A grade, and currently we see that time is not really aligned, but price is. We're expecting price in this area here, so it's high price, low time. So we have a good enough rejection to enter. So we would take entry right here, turn on the levels, and we can take 1, 2. We can take this already. There's plenty of levels between here as our stop loss level. Of course, like it's kind of a tight stop, and you know, it's the thing with this strategy. It doesn't really matter too much where you place your stop. You know, if you want to be very tight, you can get very big wins. If you're gonna go for a little bit wider stops, that's also fine as well. It doesn't really matter too much. Get a little bit less higher wins, but a little bit higher win rate. Although I would suggest that you would go for the 3 barrier, because it's just the most efficient one. Okay, so I'm gonna take this trade and let's see what happens. So is that BE already? Yeah, that's BE. Yeah, and it reached our target again for a 7.8R. So what I really like about this tweak is like that sometimes price tends to go earlier than expected. Like you can see that the time clusters are a little bit later in the session, and maybe, of course, most of the times it will actually be later in the session. But with this model, when we get like a rejection from 4 different types of key levels at the same time, it's not doing that for nothing. It's really showing you already that it's really strong and ready to go, and it's just a very strong area, difficult for price to go through. So really giving you enough evidence and fuel basically to enter already before any of the time clusters start to kick in. So I really like that combination, like, because when you don't, when your example inside the time cluster, we're already expecting it to retrace or to reverse, and then we would be working with a much weaker rejection. So that's what I really like about it. So I hope it is clear, this demonstration and everything that I told about it. So of course you can still ask me questions if you have any through Discord. I will also always be happy to respond. But just you can try to stick to this classification. To the tick is not. I don't think it's very discretionary. Just to give you some examples of this one, like this regular rejection is when it just wicks through a level and then closes above. So that would be, let's see, like here, the open is here, it goes through the close in the IDR and then closes here. So you don't see any very specific reaction, but it does reject it in some sort. So for that, then you could actually have, like, if you have 3 of those subsequently from 2 or 3 levels at the same time, it's also a B grade. And if it's from 1 level, we could just call it a C grade as well. So that should be clear. I'm also going to link this sheet in the video, so you can go and look out the samples that I took. You can redo the backtest and see if it aligns with yours. Then the last thing that I want to discuss also is some other things that I found with this model. And the first thing is, whenever you have like this first candle that confirms, and then you immediately get the setup also, I would be a little bit more cautious, because most of the times price is not really going to retrace that quickly and go up. So Of course, the model does account for that a little bit, like I just told you, with the requiring more stronger rejection classes, but maybe it's better to either skip it or to just only take like A grade or higher when it happens, and make sure that price is aligning, or that you have like some model alignment like here. Just be careful with that. But it's still something that I really need to test more, but it's just something that I found. And also, Anand is usually a fan of retracements for taking entries. So whenever you see, for example, price going up, like you see 2 green candles and you only see rejection with the open, that's also kind of dangerous. So generally you want to see price returning a little bit into the DR before you take any entry. That is also something that I saw that could really improve your performance, but still something I need to test very well. It's just some notes that I took. And another thing that is really important actually is counter rejections, as I like to call them. And a counter rejection is whenever price makes a top here, for example, and it rejects from something, then it retraces and it gives you an entry. So depending on how bad the rejections are at the top, the more it influences your setup, your position. And there are cases where the rejections are so bad, so it's rejecting, it's basically like, for example, an A+ grade rejection or a premium rejection, but then in opposite of your direction, then I would be very cautious, because I actually also recorded this, and whenever there is a very strong rejection opposite of you can actually expect it to very much impact your results. So it happened 18 times, and it was a 70% win rate when it occurred, and only 0.3 average R. And how that looks, I have an example of it. Here. So here you can see that after the confirmation we had 3 to the ticks to this multi-time frame, to this open here and it was also aligned with a special and the DRC of the ADR. So it's like it's rejecting 4 levels to the tick 3 times, so that's really strong. And then it gave a setup, I believe, like here and also here, and this just doesn't work out most of the times. So this is really important, and I call it counter rejections. And just the thing is that you kind of assess it similar as to the classification of rejections themselves. And for the optimized setup that I propose, so the tweaks for the frame, is that whenever there is a B grade rejection, it is cancelled out if the counter rejections are a high grade, like A+, unless both time and price are aligned. Because I actually also found out that once you have a very high price and time alignment and the B grade, and also like these very high counters, then it doesn't really matter too much. So again, like B grade or lower rejections are cancelled out if you have counter rejections that are A grade or higher, unless both price and time are aligned. So that's really important to take with you. So I think that's the most important part. Then just to reiterate one more time, the model. I call it like time and price ascended, or just frame 3.5. It's also fine. And these are the rules that I use. And the proposal, so how you should trade it, is like the C grade rejections only if both time and price are highly aligned. If there's like either price or time alignment, only take the B grade rejections or higher as your entry signal. If you have low to medium combos of time and price, go only for the A grade or higher. And if both are low, only take premium rejections. And of course, look out for the counter rejections. You know, all the other confluences, that's the beauty of this model, like they are not too important. Like if you have a range expansion, the results are still good. If you're trading against the direction of the range expansion, so here, for example, there's a range expansion and it just took the low, you know, and it confirmed low short also, so that's really not nice to see. But if you just stick to this system, you will still have a positive expectancy. Like it's not, of course, as good as if you're trading with the range expansion, then it's a lot higher, of course. But it just shows you that rejections itself are a very important part of this strategy. Like rejections, time, and price, basically after confirmation. That's like the beauty of this. So we don't necessarily need to be counting all the confluences to do this effectively. Of course, it's gonna benefit you and it will improve your results even more, but just these 3 elements are already like responsible for maybe 70 or 80% of the results. That's what I really like with this new time and price tweak. Okay, so that's it for this this video. As I said, any questions you can just ask me in Discord. I'll be happy to answer them. And I wish you great trading success in the upcoming week and see you in the next video.